This is Eric Mwathe. In this new series of videos, we are going to be taking a look at how you can use the RSI to time your entry into explosive moves in the market. We are going to begin by taking a look at monthly charts, even though you can use the same simple method for timing your entry in weekly, hourly, and even minute charts if you use this concept. So the concept is very simple. Again, we are using the monthly RSI. The requirement is you want the stock to have initially shown a move that brought it very close, if not touching 69.10 there. And then you want the stock to go down, and the next time it moves above 69.10 on the charts after this warm-up session is when you want to buy, because now the stock has had practice. It is now ready to take off, especially if it can hold above 69.10 on the monthly in this particular example and stay above that level. That would suggest that momentum is in the stock, and more than likely you're going to see an explosion in prices over time. Now, this method also assumes the very practical use of warming up before a game or before any kind of athletic activity. It's good to warm up so your muscles can be warm, and so that you don't hurt yourself when you stretch during a play or during a game. So the warm-up session here to me makes a lot of sense. You warm up, and then you come back and get into the real game, into the real intensity of the game. And so as long as you hold above 69.10, it means that you are performing at peak performance. So let's take a look at some examples. It's a very simple strategy. I've used it for so many years, more than 10 years, and I know it works. And so we're going to take a look at some current examples in the current market, stocks that have been doing well, using this very simple method by observing nothing else but the RSI and the requirement. And first and foremost, before you own a stock, you want to have seen it recently touch above or at least very close to 69.10, and on the second take back above 69.10 is when you want to be a buyer. So the first example is LUV, and you can see here very simple. It came here, traded above 69.10 for a couple of months, and then pull back, and it's in the subsequent move back above 69.10 here that the stock became a buy, which would correspond with this breakout here above the $14 area. So that was your entry price based on this method. Warm-up session here, followed by another entry back above 69.10 here, and that's when you see that a trigger has been set. You can also change this a little bit and say you want to see a warm-up session above 69.10. You want to see a rest period, consolidation, and the next time the stock makes a new high on the monthly RSI, which is consistent with some of the principles that I teach on my YouTube videos. So a breakout to 3-year highs, and also a breakout above the previous warm-up session here triggers another buy signal, which is also consistent with the stock moving above 69.10. So again, entry level when the stock moves above 14 there. Very simply, you can see that the stock has moved from 14 all the way to 32, almost in a straight shot, and that has taken place because the RSI has held above 69.10. That's how you know you have a winner. Take a look at another one here. We go to PTSI, and using the method here is our entry level is going to be during the second move above 69.10 here, after this warm-up session above 69.10. So your entry is once it moves back above 69.10. You can see that that's going to be coinciding with this level here, which would also be a breakout just above $21. And the stock has gone on to more than double over the last 1, 2, 3, 4, 5 months. Why? Because the RSI has held above 69.10 here. And you can also see an explosion in the stock price because the RSI makes a new high here. So an explosion at this particular level here, which happens to be where the stock actually starts gaining this fast pace gain in the price. So it makes a lot of sense that new highs on the monthly RSI and also previously had already moved above 69.10 for the second time. Here's another example, SAFM. Quite simply, there was a warm-up session here. So your next buy point based on this method is here when it moves back above 69.10, which also happens to coincide with a breakout above the previous monthly closing high. So the entry level is here at about $70. And you can see the stock went on to gain from about $70 all the way to about, it's called about 105, while the RSI held above 69.10 here. So once it moves above 69.10 and stays above that, you know that the stock is going to do well. You can see now that it's pulling back below 69.10, so maybe the momentum is over. But should the stock in the future also reclaim above 69.10, yes, you can make another attempt to see whether it can move even farther. So, but we are talking about the fast warm-up and then followed by an entry above 69.10 on the monthly as our ideal entry level, which is here. Let's move to the next example. And now we're taking a look at TRGP. And this one is a little bit odd because you can see what happened here is that it stayed above 69.10, I believe, as an IPO, and had only one small month below 69.10 and then reclaimed the level back above 69.10 here, which also happens to be somewhere around here. And the stock has stayed with the monthly RSI above that since then, which might explain why, from a technical standpoint, it's moved from $40 all the way to 160 from mid 2012 to mid 2014. And you can see the RSI has had a spectacular move, staying above 69.10. There's also another aspect here. You can see momentum really starts peaking whenever we make a new high, like here. You can see this momentum just peaked there while the stock made, in price, the stock made a breakout and the RSI also broke out. So momentum increases every time the monthly RSI makes a new high. Also, again, you can see another momentum acceleration when the RSI on the monthly makes another new high, which is here, and since then you can see the explosion in the stock price. But for the purpose of this method, we are taking a look at the entry level being after the warm-up session here and the next move back above 69.10, which happens to be somewhere here just above $40. Here's another good example, TRN, and you can see warm-up session above 69.10. So our entry level is when it moves back above 69.10 here, which happens also to coincide with this breakout above the previous monthly closing high, and so that would be above that level. Price of about 22, and the stock has since gone on to more than double in price as the monthly RSI has defended that level above 69.10. If I clear all that, you can see that there was another entry level buy signal when the RSI makes a move to new highs here, which happens to be also somewhere around here. So multiple entry levels, but for the purpose of this video, we are considering this move back above 69.10 as our ideal entry point after this warm-up session in the RSI. Now this one is an interesting one. It is UAL, and even though the stock has had a nice run, you can see there was a warm-up session here and the stock did move above 69.10 here, which is our minimum requirement. So our entry level would be here. But this was not very successful. As you can see, it broke out here about just under $40, but did not really have a nice run. You can see what happened is that it did not defend 69.10, subsequently fell back below 69.10 here, which happens to be here about just, let's call it about $46. So that would be your exit level. Because why? it did not hold above 69.10. So once the stock fails to hold above 69.10, you can get out, because now there's really no reason to be in the stock. Hope that makes sense. You want to own the stock if it holds above 69.10 on the monthly. Once it moves back below 69.10, you have no reason technically to continue holding the stock. Now, I wondered why this one did not work. Why did this stock not do well after this move back above 69.10? And so what I did is I went and checked the long-term monthly chart, and you can see the reason, in my opinion, why the stock has not done well. In my opinion, the stock has not done well because you can see here, especially when you look at it from a 10-year monthly chart, you can see that the stock has never been that strong. It always has this seemingly up, down, up, down, down, up, down, up, down, up, down. It doesn't seem to have consistent runs. Now, if you take a look at some of my videos where I talk about ugly charts, I might call this an ugly chart because the stock doesn't seem to have sustained moves. Yes, I can argue that, or one can argue that there's been a nice breakout here that took the stock from about $22 all the way to $50, which is a nice move. But in the market that has been on fire, I wouldn't say it's the best move ever. And let me show you just one other airline stock that has had a better run over the last couple of years. Now, if you take a look at UAL, it's up 4% for the month. This is middle of August or late August 2014. Now compare that with the monthly gain for a stock JetBlue, JBLU, which is up 16%. Now, one of the reasons I think from a technical standpoint is because JetBlue has previously had a nice run, moving here from about $12 straight all the way to $30. I mean, that's a big, almost 3 times your money gain. And also since then, it's had this gradual drop and then this consolidation period, and recently it started to move up. So you can see, unlike United Airlines on the monthly, this one seems to be more consistent. Now compare that. This is, to me, more beautiful chart that has some type of consistency. Compare this with this chart, which is slightly ugly in my opinion. It's all over the place. You can even say up, down, up, down, up. Not the most consistent. If you go back to the JetBlue monthly, that might explain why it's doing well. In fact, if we take a look at a closer monthly view, in light of what we are trying to learn here on the monthly, we see that it had held above 69.10. That's your warm-up level there, and then subsequently recently it's come back and moved above 69.10. So our entry level would have been here, which is exactly where we went long. The name there, just at $9. We were buyers because we were thinking that the monthly had already shown us some warm-up session and now was coming back above 69.10. You also see that the monthly is moving to 3-year highs. That's another secondary buy signal. So it's done well since then, which makes sense. So unlike United Airlines, this one is continuing to move higher. Why? Because it seems to have a better long-term monthly chart, and also you can see that it is holding above 69.10, unlike the UAL chart, which is now back below 69.10. So the idea here is you want to own stocks that hold above 69.10, especially after a warm-up session. Here's another nice example, UHAL, and you can see that there was a warm-up session here that stayed above 69.10, and subsequently it recaptured that level above 69.10 after the warm-up session here, and so the entry level was somewhere here during another monthly breakout there. Price level was just about 175. Since then the stock has held above 69.10 on the monthly and continues with its run and is still looking good. So that's what you look for, is that warm-up, and once you get that warm-up, then you know that you have a good stock. Let's take a look at another example. And you can see here there was a warm-up session, and entry level is when it moves back above 69.10. In this particular example, it stayed below 69.10 for 1 month, and on the next month also it moved back above 69.10 here. So that's your entry level, and which would coincide with this breakout above the previous monthly closing high there, which is another reinforcement that you want to wait for monthly breakouts as a trigger point. Since then, the stock has moved from $70, currently trading just under 115, and the RSI continues looking very strong as it makes even new highs. So that warm-up session here was important to tell you that the next move above 69.10 could have moved the stock higher, and it did in this particular example. Take a look at another example, and we see another warm-up session which led to an entry back above 69.10 here. Your first buy signal happens also to coincide with this breakout, so the entry level was there, which with a price of about 55. Stock did eventually give back and move below 69.10 here for about a couple months, and then immediately moved back above 69.10 here. So in October, November time period, with another breakout here, or you can use the breakout there, price level of about 62, 63, and since then the stock has held above 69.10, which is a sign of superiority there, and the stock has moved from that level and still continues to trade higher. So that move and this warm up here and another warm up here was all you needed to know that the stock can do well, and did well if it stayed above 69.10. Let's take a look at another example. And here we see one that honestly, since the IPO here, and once we had enough data for a monthly chart, we can see the monthly probably look like this. The stock has held above 69.10. My point here is that superior stocks hold above 69.10 on the monthly, and ever since this breakout here, the stock has pretty much been on fire. Price range of about $25, $28 all the way to 200 and change. So this is a key. Superior stocks know how to hold their RSI above 69.10. Let's take a look at another example, and that's the weekly. Let's take a look at the monthly here, and you can see the monthly warm-up session there, and then finally moved above 69.10 again and stayed above that, has stayed above that since this price breakout here. Price range of about $42, $43. Since then the stock has more than doubled in price, not surprisingly, because the RSI has held above 69.10. Take a look at, let's take a look at a long-term monthly view for the NASDAQ as an example. So we're going to go to a long-term monthly view to see whether this is real. This method works for major averages, for major indices. And so we take a look at the NASDAQ, and you can see even recently they had a warm-up session here above 69.10, moved below 69.10 for 1 month, and then again recaptured it, also moved its RSI to 3-year highs there. So the entry level, I would say, was somewhere during this breakout here. That would have been at a price range of about 3,500 or so. And here we see the market still holding above 69.10. That's why the market has been on fire. Okay, in fact, now if we go back to a longer term monthly view for the NASDAQ, just to show you that this does indeed work for even major averages, you can see that there was a warm-up session here in 1994, right? And then the market came back and recaptured that level again here, beginning of 95. And that was at a price range of, believe it or not, at about 800, 900 on the NASDAQ. And the NASDAQ pretty much since then would go on to trade as high as 5,300. You can see every time it moved below 69.10 and recaptured it like it did here, there was another entry level there for a nice breakout move. It recaptured it again back above 69.10 here, which is this breakout here in 97, and again recaptured it here in 98, which is good for this breakout, and again recaptured it here late 98, which is somewhere here. All of these were very successful entry points. The point I want to say here is every time a market recaptures that 69.10 level, you want to be a buyer. It makes a lot of sense because that's when the market again is back into momentum mode. Now on this chart here, we're taking a look at the Chinese market, and it had a nice run in 2006, 2007 time period, which is this nice mega move. This is unheard of, right? Nice move. Now take a look at the warm-up session. There was a nice warm-up session here. It dipped below 69.10 and then recaptured it there. So that is what I'm talking about, which coincides with this breakout here at about 1600. Since that warm up and a move back above 69.10, it moved from about 1600 all the way to 6000. So we know for a fact that the warm up session is a prerequisite for stocks before they take off, and so that's why we should always insist that the stocks we own have a similar look and feel. Now in front of us we have the Japanese market, and we are taking a look at this massive run up in the 80s here. I mean, this is a massive move from a price of just under 8,000 all the way to 38,000. That's a massive move for a major market. But take a look at this. There was a warm-up session here in 81, which is here, and subsequently it moved back above 69.10 there. That meets our minimum requirement for this method, and so you draw a straight line there. Your entry level is here at 8,000, and you can see, without repeating myself, you can see every time we recaptured above 69.10, it was a nice entry level. Every time we recaptured above 69.10 during the run, we had a nice entry level, very successful. Even here, you'd call it slight move below 69.10, immediately recaptured in the subsequent month, which would have been this period here. And again, another move back above 69.10 here, which would have been during this breakout. So we can see that it does apply for individual stocks, and it definitely applies for major markets too. So now that we've looked at some very ideal situations, let's take a look at one that did not do very well. Here's one. There was a warm up here above 69.10, and subsequently came back and recaptured the level above 69.10. Draw a straight line, so that was your entry level during that breakout. But the stock did not stay above 69.10 long enough, so subsequently it failed somewhere around here. So even using that method, you would have been out. What I'm trying to say here is that this method doesn't work all the time, but we can see that it is obviously a requirement for a mega move. Again, the stock does recapture above 69.10, and even this particular move here was not sustained. It broke out here, entry level here at about 2050, but immediately moved back below 69.10. So this one has not been doing well. Ask yourself, why is this particular stock not doing well at a time when the general market is very hot? The market is on fire. S&P 500 is above 2,000 for the first time. Market is hot. Why is this stock not doing well? Well, go back and take a look at the history for the stock. Let's take a look at a long-term monthly view, and here's why, in my opinion. It is this type of up, down, 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 up, up. This type of inconsistent move, in my opinion, sets up for a stock that is volatile and doesn't behave very well. So it is imperative, if you can, you make sure that the long-term monthly view for a stock is good. Let me give you one that has done well recently, a recent pick for subscribers, CLCA. Why did we pick this for subscribers during this breakout here? Well, very simple. We had a warm-up session, and of course I know that once it moves back above 69.10, it's a buy signal. India market was hot. It's an Indian stock. Very simple. You know, you want to play that entry level there at $35. Since then, the stock is just about to double over the last 1, 2, 3, 4, 5, 6, 7 months. So holding above 69.10 was the key, and the stock has done well since then because the method is very simple and it's very powerful. You can see a price acceleration when the RSI jumps to all-time highs there. That's another buy signal. That's why I thought the stock could do well and posted it for subscribers. Let's take a look at another here. We take a look at DDD Systems, which was one of the better gainers 2012 and 2013. It's since then cooled off, but remember that we had a warm-up session here, an entry point here back above 69.10, which is our requirement. So warm-up session, this one stayed above 69.10 for a while, cooled off, but it's just, this is your second entry level because it's now back above 69.10. Of course, you are using this as your warm-up session, rest period here, and then entry level, which would have been this breakout here, price of about $30. There was another move back above 69.10 again here. So if you're looking for a fresh entry level, would have been this entry level during this breakout here above the previous monthly closing high. So your entry level would have been there. Okay, and then there was a short 1 month blip below 69.10 and another entry level back above 69.10 here, which would have been during this breakout here. Each time the stock did well. It's only after the stock finally moved back below 69.10 here and failed to hold above that that the stock has had the pullback. So it works for sure. Here's another stock that has done well over the last couple of years, and it is CSIQ. You can see there was a warm-up session. It touched 69.10. You didn't do that. I did not do that. The market did that itself. And so once we move back above 69.10, which also happens to be a breakout to three-year highs there, your entry level is here. Now, at that particular instant, it looked like the stock was extended. Why? Because the stock had moved from $3 or so all the way to $15, closed there for the month, had one down month, which is this red bar here, and then subsequently broke out. So it looked like it was extended. But if you understand this principle here, moving above 69.10 was the key. So you know your entry level is during this breakout at about $15. If you play that entry, the stock took you from 15 all the way to 42 in 1, 2, 3, 4, 5 months or so. So the method absolutely works. And again, just to conclude here, we are taking a look at monthly charts with the requirement that we want our stock to have touched above 69.10, around that level, and subsequently after brief period back below 69.10, you want it to recapture 69.10, and that is your buy signal. If you find that in a stock, then you know if the stock holds above 69.10, more than likely you have a winner at hand. Eric Moade, good luck, peace, and blessings. Woo!